A very good evening, participants. Welcome again to another Open House webinar. Today's Open House is with NSE Clearing Technology, where we will be discussing various nuances related to NCL technology. With me from NCL Tech team, I have Mr. Upli Krishnan Srinivasan. With him is Mr. Amit Hatalkar, and with him at the fag end is Mr. Deepak Maharishi. I am Jwalant Gandhi. So now, before we dwell into the questions and the queries that we are going to explain today, let me tell you that NSE Clearing Limited, which we tell as NCL, is again a pivotal entity, as all of you are aware, which manages the clearing and settlement part from the NSE exchanges side. Now, today we'll be discussing on various aspects. So, first aspect that we are going to discuss will be related to the introduction and highlights of the NSE clearing technology. So, if I may ask the first aspect, NCL since its inception has been playing a critically pivotal role in Indian capital markets. So, if Upli, you can please elaborate more on this particular role.
Yeah, as you all know, NSE Clearing is also called as NCL, is the wholly owned subsidiary of NSE, National
Right.
Stock Exchange, and it was incorporated in the year August 1995. And the services of the clearing corporation, clearing house, clearing corporation started way back in April 1996. So it's been a 28 long year of services that we are rendering to the Indian capital markets, and it has become the premier market infrastructure institution providing clearing and settlement services. Of course, there are risk management and collateral, which we can talk about subsequently in case if there is any. Today, as we speak, NCL is the largest clearing corporation in India. It's a market infrastructure institution, and we cover about 95% of the equity segment volumes across India. Jwalan, you mentioned about we connecting to NSE and settling the trades. Not only NSE, we also connect to BSE. We also
Correct.
connect to MSE as well as a part of interoperable arrangements that we have, which we have implemented some time ago in the year 2019. Right? Just to come back, we kind of clear and settle about 95% of the equity volumes in India, purely exchange traded securities, and about 95 in excess of 95% in the equity derivative segments.
Correct.
And over the last 28 years or so, we've been continuously kind of making enhancements to the system, modifying to incorporate the functionalities that are required. There's a lot of regulatory changes and so on and so forth that has happened. So it requires a continuous investment from a technical angle and technology angle, and we've been continuously working on newer ways of providing services to the customer.
Correct.
To kind of facilitate the members and the market participants who are stakeholders and market participants.
Exactly.
Therein, subsequently kind of provide services to the market at large and participate in the growth of the Indian securities market.
Correct. Now, in continuation with that, Upli, if we can brief participants on key business verticals of NCL as well.
Yeah, see, as I said, we are handling purely the exchange traded market.
Right.
So in terms of that, as a part of interoperability, which was implemented in the year 2019, we have four interoperable segments or verticals. One is equity,
Right.
second is equity derivatives, and the third one is currency derivatives. The fourth one is offer for sale.
Right.
So apart from these interoperable segments, we also provide services on other segments, around 6 to 8 of them. One being currency derivatives, SLB segment, we have debt market segment, sovereign bond, we have tri-party repo systems, mutual fund systems, and so on and so forth. There are a couple of other things, a couple of other segments which are minimalistic in nature, but nevertheless we do that, and we provide risk management, collateral, clearing and settlement services apart from the member interfaces that we have for all these segments.
Correct. Thank you. Thank you very much. Now, it is very important to understand the robustness of various implementations carried by NCL. So, if we are diving more into it, and let us try to understand more on the facets like tools coverage or resiliency, fault tolerance, and different contingency implementations as well.
Yeah, That's a good question. See, we've been facing a lot of volume growth, right? I
Right.
mean, it has grown multifold or manifold over the period of, I mean, since the pre-COVID times.
True.
As we sit here today, we are having about 5 to 6 times the volume that we were having, that we had during the pre-COVID times.
Right.
Right. That's a substantial volume that we have kind of being able to manage in the last 3 4 years of time. So given that situation, just to give you a pointer, we are handling a peak volume of, we have handled the peak volume of about 23 crores.
Okay.
Single sided, either buy or sell. If you take 23 crore transactions, which translates to about 46 crore transactions that we have risk managed, cleared, settled, and handled collateral. Right, this is the equity derivative segment. Similarly, on a daily basis, since the time we have implemented the client collateral upstreaming,
Right.
on a daily basis, right? Today, on an average, when I look at it, we are handling about 4 to 5 crore collateral related updates that keep on coming. It's not that it happens during the market hours. It starts from 7 o'clock or 6:30 in the
Correct.
morning and goes on till 9 o'clock in the evening, and that's a substantial volume. So we have to keep up with times in terms of non-functional requirement and
True.
the market growth that we are seeing, apart from the regulatory changes and the business changes that are coming.
Right.
Right. I mean, as we see the growth, we need to handle certain manual processes. We need to try and automate it as much as possible. So we've been continuously investing time, money, and energy in trying to automate those manual processes. We've automated a lot of tasks and workflows that we have in the system. This is across all the 4 verticals that I talked about.
Right.
And we need to have an high availability infrastructure, right? I
Right.
mean, we should not have any disruption in the market.
True.
So we keep on innovating, or we keep on innovating in the software side of it. We also try and improve our service capability in terms of adding more highly resilient servers and infrastructure.
Right.
And also, we are also trying newer ways of giving information to the participants, right? Originally, traditional ways to have a front end screen, you go click the button,
Yes.
get the download of reports, and so on and so forth. Of late, if you see, even though you can say that we might be a late adapter, we are moving towards an API based interface, right? So what it kind of translates into is to give faster information, right? Otherwise, I'll have to go to the front screen, log in, change screens, and so on and so forth. Rather, if I connect to an API, it's a continuous stream of information that keeps flowing.
True.
So those kind of newer ways of sharing information is something that we have started. I'm sure we will keep on improvising and improving things, both in terms of resiliency, capability, capacity, and so on and so forth. Just one more thing about capacity, which
Yes.
I missed answering, is that we monitor the capacity of all the systems
Right.
on a continuous basis, near continuous basis. And whenever we reach a threshold level, we have internal processes where it reaches a threshold level, we add new servers,
True.
we add new infrastructure, and ensure that the system is able to handle the volume growth on a continuous basis, and ensure that the services are not impacted as much
Exactly.
as possible.
And I'm sure, as you rightly said, the evolution journey has been tremendous. It seems that through all these efforts and enhancements, those are made into the systems, especially. Now, when we're talking about the contingency implementations as well, definitely disaster recovery technology has always been a critical factor in success of exchange and CC operations. Now, since past few years, DR technology has been evolving exponentially stronger. If you can brief participants about DR technology infrastructure along with the RTO and RPO, and before you answer, if you can just mention what is RTO and RPO as well.
Yeah, RTO means time for recovery.
Okay.
And RPO is a point of
Okay.
recovery, right? Recently, last 3 4 years ago, SEBI came up with a recommendation or a mandate saying that the recovery time objective, RTO, should be within 45 minutes. Right. And the recovery point objective should be 0 or near 0.
Okay.
Right. So this is the background. Earlier we had 4 hours of recovery time and so on and so forth. A couple of years back, SEBI changed it. So there is always a possibility of some event or some failure happening at the primary data center. Right? right? So just to ensure that we are having continuity of service and minimize the impact of some some event or disaster or anything, what we have done is again SEBI mandated this as well. We are having a three-site architecture.
Right.
The first site is a primary data center.
Okay.
The second site is a near data center, which is close to primary data center within a 5-kilometer range of our primary data center. Then a disaster recovery center, which is in a different seismic zone.
Okay.
As much as possible. So the servers between the DC and the DR are 1:1 ratio. It's a server infrastructure, network infrastructure, or 1:1. So whatever it is like for like in terms of capacity, in terms of CPU, in terms of memory, and everything, it is 1:1. So in case of any event, we do a continuous replication to the near DR center, which is more of a bunker site, which is used for recovery in case if there is any miss in connectivity between the DC and the DR. DR can connect to the near DR and then fetch the incremental data. Now, what happens is if any problem happens in the DR center, we have a capability to move to the DR center from the primary data center within a 45-minute period, which is mandated by SEBI, and we have been consistently able to achieve that timeline. Right now, this is in terms of the capacity. This is in terms of the infrastructure availability, hardware failure, and so on and so forth. Recently, SEBI, SEBI had mandated. It's a 2-year-long exercise that we did along with the other clearing corporation, which is ICCL, wherein the risk and the collateral system and member interface system, if there is a software issue, right, in the primary data center, it is more likely that will percolate to the disaster recovery center also. So the SEBI mandated, SEBI came up with the requirement saying that why don't you kind of provide software as a service? Right. We call it ISRM. Right. Because software as a service, as a SaaS, has a different perspective, cloud and all those things. We call it ISRM, which is Inter-CC Software Reliability Management. Right. True. So in case if there is a problem in the risk management system, right, of NCL, we will run the risk management out of the system provided by ICCL. It will be managed by ICCL. For the day when that problem happens. Correct. Similarly, the vice versa will happen in case if there is a problem in ICCL systems. We will run it on behalf of ICCL with the data belonging to ICCL. So that operations are not hampered and timely execution can be done. And we don't have any impact on the market per se. The market can continue operating with the minimum, of course, there will always be a time break. With a minimum time break, we can continue with the market and not to have any major impact on the market. So this has been implemented in the month of February. We did it in ICCL was hosted by us, and last Saturday we had the privilege of ICCL hosting our failure scenario, and both of them went smoothly, and the members were connected to both the systems. The respective members were connected, and they were able to experience that facility, which was accepted widely by the market participants. And I'm sure the participating members who are there in session today, they have also been testing the systems as we have been encouraging them to do so during the mocks that we are having for this particular inter-CC processes. Absolutely. Great. And we will continue to do the mocks as we go forward on a periodic basis, either on a quarterly basis or something. Mutually, we'll discuss with ICCL, and we will do that on a periodic basis and keep the market participants, involved as well. So that any changes that happen in the software, they are also kind of accustomed to it, and probably they also get the confidence also that everything is happening very smoothly. Absolutely. Great. Thanks. It was very crisp explanation, Upli. But one of the facet which is of utmost importance again is security. So if you can explain on security considerations and implementation of NCL technology platforms as well. Yeah, like I said, India, NCL is the leading clearing and settlement or clearing corporation in India. Correct. And it is an institution of a national importance. Right. That brings in added, responsibility and, responsibility on our shoulders. Along with that, recently, you would have heard about a lot of news about cyber incidents like malware, ransomware, and so on and so forth. Right. So apart from us handling the functional aspect of it and service aspect of it, we have to take care of the security aspect as well. Any impact on our servers, on our systems and infrastructure, it is going to have a deeper market impact.
Okay.
Because the exchanges then have to shut down and so on and so forth. Because if the risk is not there, members will not be allowed to take any exposure and so on and so forth. So we constantly work on improving the security aspect of it. In a way, what we have done is we have put in a lot of the security related implementations like data at rest. We have encrypted on the channel basis. We have done a secured FTP implementation, HTTPS over TLS 1.3 implementation,
Right.
TLS 1.2 strong cipher implementation, and so on and so forth. Right. That is for the market also product. While we have done at the clearing corporation level, all the systems are able to handle all these encryption logic. The members also have to come forth and then adopt it so that it becomes smoother. It is for all of us, put together that we need to ensure that we embrace this,
Right.
to ensure that we are taking care of the cyber related aspects as well. On top of it, I mean, these are all which is within our control. Apart from that, there are controls, compensatory controls, which we have within the system to ensure that we double up on the security aspects as much as possible. Even if something kind of sneaks out, at least at the base layer, the basement layer, we are able to control it. There are compensatory controls that we have implemented as well, which kind of takes care of the cyber related any eventualities that might arise.
And I believe all these efforts are in benefits of overall ecosystem, including members. So I recall that NSE and NCL has been definitely suggesting members to go to that TLS strong cipher initiative that we had undertaken.
Correct.
So probably members, if timely adoption is done by them, then it would benefit all the market participants as well as ecosystem as well.
Absolutely, and we'll continue to invest on the technology and the security aspect.
Correct.
Which we have been doing in the past. We'll continue to do that. We'll continue to enhance our services as well.
Okay.
To ensure that the market participants are getting those relevant informations in a timely manner and also able to participate in the market efficiently and effectively.
True. So thank you very much, Upli, for these helpful insights. Now let us move further to have overview about the clearing and settlement along with strategic programs delivered by NCL during recent past, for which I believe Amit would like to chip in. So Amit, if you can please give overview of clearing and settlement platforms to start with, which are catering to different functional needs.
Sure. So thanks, Varun. Good evening, everyone. Clearing and settlement function currently takes care of around 8 key asset classes, out of which cash market, equity derivatives, then we call it futures and options, currency derivatives, commodity, securities lending, borrowing, and mutual fund are some of the key ones. Clearing and settlement function is responsible and comes into picture once the trades get executed on the exchange and the trading platform. And post that, after the risk management, which is an online exercise, trades are used for position computation. It is followed by the obligation computation, both on the buyer as well as seller side. The deliveries get computed for each and every CM-TM client combination. CM means clearing member, TM means trading member. So the granularity which today is existing in all our technology platforms, serving to various different asset classes, is at a clearing member, trading member, and client level. Once the obligations get crystallized, then post the deliveries get generated, then the settlement takes place on two parts. One is the funds level settlement. The another one is the security settlement. We are having the various different interfaces with the depositories for security settlement, where there are 2 or 3 key functionalities which are there, which is early pay-in, which is happening throughout the trading hours till the time the settlement comes into picture. And at the time of settlement, there is a securities pay-in and the securities payout handshakes which come into picture with the depositories. Similarly, with the clearing banks, we have the interfaces for fund settlements, for the funds pay-in and funds payout. And there are the interfaces which are in existence with different clearing banks, which are doing the clearing of the fund settlement on behalf of the clearing members and which act as an intermediary between the clearing corporation and the member fund settlement. With the advent of interoperability, the functional landscape has undergone change in last around 4 to 5 years, where earlier when the NCL was responsible for clearing and settling the trades which were getting executed only on the NSE trading platform, with the like a rollout of interoperability, clearing members who have chosen to clear their trades through the NSE Clearing Corporation are actually allowed to execute their trades on the trading platforms associated with various different exchanges. And by virtue of that, the architecture and design has undergone change across the NCL platforms to give the seamless experience from a real-time risk management, which is happening across the exchanges. At the same time, also ensuring that the consolidated clearing and settlement activities across the interoperable segments, namely cash market, futures and options, currency derivatives, and offer for sale, is taking place for all those clearing members whose trading members have executed and the clients who have executed the trades across the exchange platform. Uh, Additionally, the depository interface today, which is in existence, is having the file-based data sharing mechanism. We are working with the depositories to go to the API-based data sharing mechanism, and there is already the programs and the projects which are in under development phase in that particular area. Fund settlement today is happening with the clearing banks into a dual mode. The clearing banks who have adopted to the online fund settlement, we have the message-based communication framework in place where the once the settlement cycle gets initiated, then the fund settlement instructions get exchanged through the hub. And with that, almost the real-time fund settlement infrastructure we are having in place, although that is getting carried out as per the timelines in the T+1 and the T+0 settlement windows. But there are certain banks who are in the process of migrating to the online fund settlement. For them, we have the file-based settlement like interface from a technology perspective also in place. Just in the beginning of this year, we have gone live with the direct clearing through UPI, a particular facility, which gives the investors the ability to block their funds collateral actually, on the name of clearing corporation without transferring those funds to the members. And and this particular facility has been provided to the different investors who would opt for it by using the UPI interface. And this facility has created a scenario where we have created a real-time API-based handshake with the sponsor banks. And with that sponsor bank interface, we have made the internal changes to carry out the message-based communication within our internal ecosystem, mainly with the clearing and the UPI exchange. And then we are carrying out the settlement. So this is at a high level various different functional platforms as well as the functionalities which are being covered. One more thing which I would like to quickly mention, because this has been again the advent, this has been something which has been delivered in the recent past. Till around a couple of years back, the physical delivery of the futures and options position was happening separately than the cash market. But for the benefit of our members of our ecosystem and as per their request, now the netting of the physical deliveries are taking place between the futures and options and the cash market on the day of the expiry. And that's how the clearing and then the settlement platforms have also evolved in the recent past.
Thanks, Amit. Now, you briefly took reference of the architectural framework going multiple changes. So let's have a quick understanding on the architecture and design considerations for which the changes were carried out in recent past that you were mentioning. So particularly on design considerations, any changes that we have undertaken through, if you can brief upon that.
Sure. So architecturally, when we have delivered all these key initiatives in last few years, especially the interoperability, as well as going from our earlier clearing member, trading member, margining, and then the clearing initiatives to going to the granularity of clearing member, trading member, and client level. There were certain key architectural reforms which have been put in place. And the focus of our architecture continues to be on availability of our system and continuous availability of our system, resiliency, fault tolerance, configurability, then making sure that our platforms continue to remain flexible and they are adaptable to the market needs and market changes so that the velocity of the requirements can be handled. To elaborate on how we actually deliver these architectural principles when it comes to our design, our designs are all the platforms, across the asset classes, our designs are modular in nature. They are loosely coupled, and they are loosely coupled to the each and every functionality level, so that there is the reusability as well as necessary changes which are specific to the business rules associated with the asset classes can be implemented. The second architectural principle implementation which we put in place is we ensure that the same functionalities are having the similar or the same technology stack. That ensures that, and we have in the clearing corporation, mainly in clearing and settlement, there are two flavors of functionalities. One is the online functionality, another one is the batch level functionality. So we have the specific technology stacks which are identified, which we leverage across the asset classes to maintain the uniformity as well as leverage the reusability across the platforms. The second one is when we actually go and design or the change any particular asset class related platform, we try to mention the uniformity of the architecture and design across the platforms as to the extent possible. But at the same time, when it comes to development of those systems and the deployment architecture of those systems, that is kept separate to ensure that the impact of one asset class platform will not be felt in the on the operations floor by the the another platform. From a DR perspective, disaster recovery perspective, we have the robust data replication mechanisms in place, and there are data replication mechanisms which we have implemented across the primary site and DR site, as well as primary site, near DR site, and from near DR site to DR site. And over there, the technology consideration which has been taken into which we have taken into consideration is ensuring that there is a zero data loss, and then there is a recovery time objective of 45 minutes, as mentioned by Upli, which will continue to get met. From a security perspective, the security architecture takes into consideration, and that has been taken into consideration at the application level, infrastructure level, as well as network level. On a periodic basis, we carry out the VAPT, that is vulnerability assessment penetration testing. We carry out the gray box testing of the applications. We carry out the external penetration testing of some of our external facing applications.
Thanks, Amit. You have already briefed on strategic and regulatory programs that we have delivered, but do you want to highlight on a couple of such initiatives these are executed in recent past along with the overview of that?
Sure. I will just cover the key initiatives or the programs which we have delivered over the last around 3 to 4 years. One of the most important initiative has been the interoperability of the clearing corporations, because prior to interoperability of clearing corporations, there was a relationship, a tight coupling between the NSE and NCL, and then of course other exchanges and their related clearing corporations, where the trades getting executed on the exchange trading platforms were getting cleared and settled by the associated clearing corporation. With the interoperability, the clearing members who have chosen to clear their trades as well as settle their trades from a particular clearing corporation were having the option for their trading members who can take the position, who can execute the trades across the exchange trading platform. And with that, there was a key architectural changes which were needed across the NCL ecosystem, mainly in the risk management, clearing, and then the settlement space. And this has been carried out for the key 4 interoperable asset classes, namely the cash market, futures and options, currency derivatives, and offer for sale. Post that, Indian capital markets moved from T+2 settlement to T+1 settlement. And there was a period of around 12 months where, to allow the market participants to smoothly transition from the T+2 settlement to T+1 settlement, and allowing their back office systems to be in readiness to accommodate the entire market getting shifted from T+2 to T+1. There was a period of 12 months when NCL offered the T+2 and T+1 settlement both in in parallel. And after 12 months, of course, the T+1 continue to be the settlement periodicity till T+0 settlement came into picture. And at this moment, when the philosophy still continues to remain the same, we are offering both T+1 settlement and the T+0 settlement mechanisms to our market participants on a parallel basis, and that is being executed. In addition to that, there was a change where earlier we were in a position to compete as well as carry out the obligation and the delivery computation at a clearing member and trading member level. With the requirement where the investor protection was needed at the client level, we have introduced the granularity in our all the platforms to go from clearing member, trading member level to clearing member, trading member, and the client level. With this, we have implemented the direct pledge repledge of collateral and then the funds collateral at the client level initiatives in last couple of years. In addition to that, we have implemented the UPIX platform, which is, as I mentioned some time back, where the investors do not require to now transfer their cash collateral to the members, but investors can block their collateral in their respective banks by using the UPI interface provided by their members on the name of clearing corporation, and the money gets transferred only when the settlement associated with the client positions come into picture. So some of these initiatives require the large scale architecture and the design changes in the NCL platforms, mainly so in the clearing and settlement space, and those have been implemented.
Okay. I guess one more initiative has gone live recently, which is UDIP file format. So if you can give a quick update on the same.
Yeah. So with standardization of various different processes as well as the reporting formats has been one of the initiative which is being worked upon across the ecosystems, especially by various different MIIs. And UDIP file format is the initiative in that particular area. Unified Distilled File Formats, that is the full form of UDIF, means that all the reports which are getting exchanged with the members, clearing members, and the custodians would now be having the standardized agreed UDIF format across the clearing corporations. It covers the functionality of trade report, positions report, obligation, deliveries, STT, securities transaction tax, that is stamp duty, as well as the various different margin reports. These particular reports, while they have gone live and they are being provided in the standardized format, there was a request from the market participants to continue for NCL to continue to provide the non-standardized as well as standardized reports on a daily basis. And there are around 80 odd reports which we are creating in both non-standardized as well as standardized format for each and every clearing member and trading member of ours. And on a daily basis, they are getting exchanged with our member community. On this front, I would request our market participants to quickly adopt to the standardized reporting format.
Correct.
So that the computation generation and then the transfer of all these 80 odd reports for each and every clearing member and trading member, we will be in a position to decommission, and that will help us to improve the operational efficiency from an entire ecosystem.
And definitely it will be a smoother migration as well.
Absolutely.
Correct.
Absolutely.
Thanks, Amit, on explanatory details on these important aspects. Now, for NCL members, definitely another area of interest may also be member-facing services and risk and collateral management. So let us try to address facets related to it. And probably for that, I'd like to invite Deepak to chip in. So first thing in that is our ecosystem has been changing with respect to business and regulatory requirements. So Deepak, can you brief design and architectural factors to address these changes which we have been implementing?
Sure. Thank you, Jalan. Good evening, everyone. So basically, to focus on the primary area where member-facing services that are being provided, which allow the members to access and submit information about what their trades, margins, and collaterals, as well as take actions like early pay-ins, give-ups of CP trades, and so on. With changing business and regulatory requirements, as well as Upli mentioned, the increase in volumes, we have to constantly make sure that our systems are able to support the new requirements as well as the increase in the volumes. So we have designed interfaces which are secure and user-friendly, while also they are scalable, so that these diverse set of requirements can be satisfied whether they are regulatory or business needs. This front-end interface is supported by a modular host end where we have implemented a multi-channel architecture at the back end that supports this front-end interface and provides a strong foundation for the applications to be high performance, scalable, and easy to maintain.
Okay. Thanks. Now let us try to give an overview of comprehensive risk management systems of NCL, and especially from the perspective of capabilities to scale, which briefly was mentioned by Upli as well.
Sure, sure. So, in fact, even Amit mentioned about whatever happened in the last 4 years and the new changes that have come in, specifically with relation to client level collateral being maintained. The risk management system, which is responsible to compute the real-time positions and margins and perform monitoring on a trade-by-trade basis. Once the client collaterals are being now maintained at the lowest, that is the portfolio level, it requires the risk management system to work in a better way. To manage this, our RMS engines use a distributed architecture. So this architecture allows provisioning of worker processes which can manage the load which is coming in a parallel way. We continue to do improvements to the risk management application by scaling the application, typically, as Upli also mentioned, by adding more machines or nodes to the system. This helps us in the managing the increased load, as it can be handled by utilizing additional resources and make sure that no specific process or component overburdens a particular set of resources. So we have used that principle to make sure that as volumes grow and as new requirements come in, the risk management system continues to run and on a trade by trade basis continue to do risk monitoring.
Understood. I'm sure that members would like to see even faster trade action and margin download. So if you can brief upon the ongoing initiatives which NCL is undertaking for that.
Sure. So in fact, members have been working with us on the go live of downloads using APIs, which Upli touched upon when he spoke about it. And as part of this, in the last few months, based on the feedback that we've been receiving from members, we have been making changes to ensure that the trade downloads that members receive are improved. To specifically, members have been giving feedback that with every API request, as many trades that can be downloaded to them are downloaded, and we've made changes to ensure that each request results in as large a number of trade downloads as possible to reduce the number of requests that need to be done during the day. In addition to that, at the back end, we made a lot of changes to ensure that costly queries which come to us do not hamper the processing speed for other queries. We have also received feedback where members want to know that when we have made an API request, are there any more trades that we should expect? And members were facing these problems, and we received this feedback from them. So now we have ensured that whenever we send back a response to a member's API request and there are no trades, that based on the response, the members are able to identify that whether they should expect more trades or not. So these are the changes that we've done on the trade and action side. You also mentioned the margin information. For margin information, we have improved the data sharing capabilities and ensured that when we are displaying portfolio level margins and the collateral information, that the data is better in terms of improvement. We have also improved the periodicity of data refresh when we are sending member level margins, collaterals, and other information which is being displayed on the NMAS front.
Okay. Now, in the initial phase of today's session, Upli has already explained the inter-CC software resiliency model, which is ISR and SAS. But still, for the participants who joined late, Deepak, quickly, if you can just try to summarize what is it and what are the benefits?
Sure. Actually, Upli has summarized it quite well. Probably I will just add one point to how the model works.
Correct.
So, which will be interesting for members to also understand.
Mhm.
How the model works is basically that each CC parallelly is running their systems on a daily basis for the other CC, so that whenever there is any disruption or unavailability or a software failure which makes it difficult for the affected CC to move to DR, that the other system is always up and running and available for continuing the business operations. So that was one key aspect which every day typically both these systems are running in parallel at both the CC lines.
Thanks. Thanks, Deepak, on apt explanation for our participants. I believe members would be interested to know on few next big strategic technology initiatives as well. So if I may ask, the first pointer which is in list is T+0 settlements for custodian trades, and probably any of you can chip in who wants to answer. Maybe Amit.
So T+0 settlement for the custodian trades is the initiative which is under design and development. And with this, there are certain business rules which are getting crystallized, and post that we are looking forward to delivering this particular initiative within next few months.
Okay. Next one is the business process optimization for clearing and settlement reports. What are the roadmaps for that?
So business process optimization has been the continuous exercise, and especially so considering the fact in terms of the kind of volume increase which Upli has touched base upon in the initial introduction. We are looking at the application level process optimization as well as ensuring that the resource and the compute level enhancement also put in place to ensure that while the functionality has increased the complexity along with the volumetrics which are involved, we would be in a position to deliver the reports to the market participants in a faster manner. The way I mentioned, there are certain activities which we carry out in a dual form. The way the UDIF reporting is currently happening in both non-standardized as well as standardized formats. If the market ecosystem moves to the standardized format, that will take certain compute as well as the transfer and generation which we are carrying out for the non-standardized formats, which are as it is expected to go away. And with that, we will be in a position to bring even more operational efficiency and the faster time to market when it comes to the reporting.
Again, sometime back you took reference of depositories and clearing banks interfaces as well. So I'm sure that there is something going on as API-based handshakes with those interfaces for depositories and clearing banks. So if you can highlight on that.
Yeah, absolutely. Miss, till date or till recent times, file-based data exchange mechanism has been the norm among the MIIs. That includes the depositories as well as the clearing banks. We are going with the principle of migrating all our file-based data handshakes to the API-based data handshakes. We are in the advanced stage of development as well as completion of the development as far as the early pay-in of the API handshake is concerned with the depositories. It will be followed by the collateral pledge repledge and then the pay-in pay-out instructions, which will also be go in an API way, while the file-based transfer will continue to remain as contingency. As far as clearing bank are concerned, where the fund settlement comes into picture, we have already implemented and deployed in production both the modes of data exchange, file-based data exchange, as well as the online fund settlement. It is the various different clearing banks are getting their systems upgraded, modernized to move from the file-based mechanism to the online fund settlement mechanism. And once that happens, we will go again the same way we have talked about API, where we are looking at the common principle over here is share as much information as possible in the online way, with the contingency being handled with the file-based backend.
Okay. Deepak, in addition to this APIification, I'm sure that there is something going on for the APIification of key members facing interfaces, particulars like data download, actions, etc. So,
Yeah.
do you want to touch upon that?
Yes, in fact, we've been closely working with the members, and the members have also been testing the API interfaces, not just for downloads, but also for the give up actions, which in addition to the current interface, the API interface can also be used. And members have been giving us a lot of feedback on these, releases which we have made for them on the UAT instances. In fact, we would urge members to continue this, because this feedback is helping us in making sure that when the APIs actually go live, that based on these feedbacks, there is a much more improved experience for the members. For the APIification, what we have basically provided for testing is the modifications, approval, rejections of CP trades. We have also provided API-based actions, which once the UAT phase is over, the plan is to release it in a parallel mode, so that members are able to conveniently move to the API system. We are also planning going forward to provide margin information and collateral information via APIs. Their work for that is ongoing. Based on the feedback that we've also received from members, specifically for the trades and actions download, there are certain improvements which are parallelly happening to ease the work at member end while they receive this data. So this communication will be shared with the members in due course, and we are working on improving the existing APIs further based on the feedback that we are receiving.
Okay, and how about the initiative of unification of CIM and NMAS interfaces?
The unification of CIM and NMAS interface has been initiated some time back. What we are trying to do is move functionalities or features in a phase-wise manner. The objective here is to make sure that the movement happens in a convenient way, and details about the phases in which the SIM functionalities, whatever are remaining, they will be shared with the members, and we are continuing to do that as we move along, in addition to whatever APIs interfaces that we are releasing.
Okay, and last but not the least, probably if you can touch upon enhancements like improved intraday positions, report, and derivative segment.
Yeah, so along with whatever other work that we're doing, we are also planning to improve certain key reports which members are using on the NMAS front end. These reports, basically, we are trying to improve the quality of the information, the amount of information that members will be able to get as part of these reports, and they will be released in due course. So the details of what changes we are planning will also be shared with the members. But we are working in the area of both the user interface, the reports, the APIs, as well as bringing all functionalities under one umbrella by unifying the SIM interfaces as well.
So it may be termed as a 360-degree inclusive experience that probably we are going to create.
Yes, you put that quite well. Yeah.
Okay. So participants, with this, we have come to an end to what we aim to explain and cover for today's open house with NSE Clearing technology. Now, before concluding the session, I request probably Upli, Amit, or Deepak if they wish to make any summarizing comments.
Thank you everyone, one and all. Thanks to Deepak and Jwalant and Amit. We've covered a lot. We explained to you about what we are doing in terms of functionality, in terms of what are the services that we are planning to improve in due course of time. Along with that comes the security related aspects as well. The adoption is very important from the security adoption point of view. Having said that, we request the members and participants to encourage them to come out and inform us if they are facing any issues in terms of whatever we are implementing, and we are very happy to take it up and then see how we can improvise and improve it further to have a seamless experience. Thank you, Anand.
Thank you. So with this, we conclude today's open house. Definitely, by far, you know that we'll keep doing more and more such open house webinars. So we look forward your participations in upcoming open house webinars, which is going to happen very soon. So have a great weekend coming ahead. Thank you. Thank you very much again.
Thank you.
Thank you.
Thank you, Anand.